Laurie, thank you very much. Well, the major index is headed towards one of their biggest declines, as we've said, of the year, as those popular trades emptying out, it appears. Joining us now, the executive editor of InvestorPlace.com, Jeff Reeves. Jeff, thanks for joining us. I guess as we've seen the struggle over the healthcare bill, are you surprised that we're seeing this type of sell-off on the markets today?
I mean, I wouldn't say I'm surprised. I do think we kind of priced in a lot of everything back in November and December. It's not just stocks, but it's also the bond market. I mean, the rates on the 10-year are basically where they were after the previous rate hike. So I'm not really surprised to see a little bit of volatility. But again, it's a very little bit of volatility. We're not seeing a big move either way. So I think it's the same as it ever was, which means you kind of got to pick and choose your battles in this market right now.
Talking Heads, great song. Well, to follow that up, Jeff, I saw in your notes you said, I'm not a bear per se. That's not exactly, overly optimistic. What do you mean by that?
Yeah, I mean, just in your last segment, I guess we're talking about how it's really hard to see a catalyst higher. I suppose there's a chance. I think your previous guest put it at 30% that we could see a big move higher from here. But I think we really priced in a lot of progress in Washington and in corporate earnings right in December and November. So I don't know what the catalyst is higher from here. So I do like Europe right now. I think you can pick some growth names. I still really like Facebook after its last earning report. I think it stands out in tech among some other companies that I wouldn't go after. So I mean, it's a platitude, but I do think I think it's true that you need to think about stocks, not think about the stock market. It is a market of stocks, and to be discerning. And it's important to kind of ride the trends, take what the market gives you. And right now, I mean, honestly, the volatility today isn't really volatility at all. It's not giving us much at all.
So what are those areas you're avoiding? What don't you like?
I don't really like energy. Again, we've seen the dollar kind of drop a little bit more. With weakness in the dollar, there is all the concerns about OPEC that you talked about. I think supply is going to remain pretty big, and demand is going to remain pretty weak. The other thing we need to remember that if we do see rates continue to march steadily higher, or at least stay where they are now, I do think credit markets are going to do what they did to a lot of these small cap energy companies that we saw a year and a half ago. It's not going to be easy to access capital there. So I'm not bullish at all on energy. I think that people should kind of steer clear of commodities broadly right now. But I do like some of the tech stocks like Facebook, because growth is still slightly hard to come by. If you can find a stock like Facebook that's growing consistently, it's beat expectations ever since like 2012, I would take a stock like that to the bank when you can get it.
Laurie Ralphman, let me bring you back into the conversation. You're among all the traders down there. Are they surprised by the breadth of today's sell-off? I know it's only just over 1%, but it is 250 points. What kind of feel are you getting from the floor?
It hurts, but it's healthy. And even a little bit more of a slide could provide even another entry point. I mean, this is all politically based. I love your last guest's point about, this is a stock picker's market. You really can't look at the overall stock market, a stock picker's market, because, we've got earnings coming out after the bell. There are a lot of stock-specific stories. Everybody's thrilled about the cheap iPad Apple's announcing, saying that could push it to record highs. So if you're a savvy investor, you're looking at stories on individual names, because broadly it's all about Washington. Trump, promised health care repeal and reform. Subsequent after that, tax reform, and there's a lot of concern that those deadlines aren't going to be met. And don't forget how fast and how far this market has come since Election Day. We're approaching the closing bell now. It looks like we're going to close very close to session lows here on the industrial average.